Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market became a bit choppier this week, but continued its record-setting climb. Inflows surged into equity markets, and as reported by the Financial Times, there was a $32 billion inflow into global equity funds in the past week, and so far $77 billion this year. This has been a massive flow into equities, and we could see that as stocks just continued to rise unabated. There are simply not even any pullbacks that can spend more than an hour on the downside. I'll show you that as we look at our hourly chart in a moment. Money is just moving out of all of the liquidity traps that it was in based on what the Fed did for 8 years. And now as central banks are either changing policy or talking about changing policy, then the markets are realizing that money is coming free and the stock market is absolutely surging. The collapsing dollar didn't mean a whole lot, and the dollar hit our long-term target we talked about months ago, trading down below the 88.50 number, as Treasury Secretary Mnuchin came out and said, well, he wasn't that concerned about a weaker dollar. And then shortly after that, the next day, there was a contradiction as POTUS came out and said, well, he thinks the dollar is going to go up. Of course, neither of them have any idea what the dollar is going to be doing. And if they are simply overseeing, like all of the Treasury secretaries and all of the presidents have done, watching the federal banks, the Federal Reserve, and all central banks around the world print money at a level that is just scary, and they don't seem to see the risk in that. But in the meantime, asset prices are surging, and we're seeing that stimulus coming into commodity markets also. Of course, as the U.S. dollar gets cheaper, then what happens is that our goods then become more interesting to foreign buyers. And, well, you can make a bullish case for everything, it seems, right now. So we're getting potential for more foreign demand coming in, and there's going to be a battle as these other countries fight back, as they want some of that inflation. So before you know it, their interest rates are going to start going up, and we're going to start to see some tone changes out there. Earnings season winding down in here, and we've seen both big up and down moves based on earnings. And what's notable is that as we talk about this stimulus, that in some industries, as CapEx expands, they build more capacity. That has hurt the airlines this week. They're really feeling it, and they've had the worst week in a long time with airlines moving down pretty significantly. Got to wonder, you know, Boeing has really been a stock that has benefited from the concept that the airlines are doing a lot better and be buying a lot of airplanes. Now you got to wonder, Boeing looks like it's starting to get a little bit sluggish here. Also, Dow stocks, we had Caterpillar pop and then had a very big drop, kind of failed. Procter & Gamble, disappointment in earnings. Same thing for Johnson & Johnson as they move down. And Apple is very close to breakdown levels, at least on a short-term basis, as the analysts start to come out and say they're worried about poor guidance coming out of Apple. So all of those can affect the Dow, and we kind of see the Dow underperforming right now. At least it is today, and there's a pretty good possibility that the Dow will be the first of the indexes to lose strength and then maybe start to give some ground. Let's take a look at our 60-minute chart of the S&P 500 as we look at what happened during this week and what the news items were that drove the markets. The biggest move that came was really early in the week after the news came out that the Congress, the Republicans and Democrats came out with an agreement to reopen the government. And you could see we got a big pop right in there. And that was kind of the biggest day of the week as we had that big jump. And then chop really started to come into the market. Some news came out that the president is imposing tariffs on solar panels and washing machines, and there's already some sense of some backlash on that, of course. Bank of Japan came out and said no change. There was a big earthquake and some tsunami warnings. So we had this decline right over here that absolutely didn't last, and then the markets popped back and kind of moved sideways on Tuesday. Wednesday was a day that Mnuchin came out and said that he backs the weaker dollar. Gold, of course, jumped. It really exploded that day. It had a couple of big up days, Tuesday and Wednesday, and then started to settle back. And then trade war talk started to heat up, and bonds started to break in the downside, and a big reversal in tech stocks as they had a very big drop in here. You could see the same thing happened in here on Thursday also. Part of that was Caterpillar, as Cat reversed down after a big beat on earnings, and that kind of spooked the markets. There were some other stocks that came out with some pretty good earnings, Boeing, M, Goldman Sachs. That gave the early lift, but really couldn't hold up the market at all. And then we had this bounce in the dollar right over here, and big reversal in the dollar that was down early in the morning on Thursday, and the euro currency was up, and they kind of switched places, and that looks like we think a little short-term bottom coming in the dollar. We'll show you that as we get into our short-term view. Then overnight in here, we saw the markets just creep to the upside. GDP came out up 2.6%. That was a bit lower, but as you could see, no issue whatsoever as the stock market continues up. And here, as we do this with 2 hours left to go in the day, you can see that the stock market is right now sitting at an all-time high. So that's what happened on the 60-minute chart, and you can see that there's basically nothing that was able to stop this market from moving pretty significantly to the upside. We have the S&P 500 and the Dow Jones gaining about 1.7%, pretty solid gains. And there, the Nasdaq the Nasdaq up about 1%, just under, and the Russell, the laggard for the week, just up a few points in here as the stocks that look like they were leading it, which were second and third tier stocks, the cheap low caps, they seem to have stalled in here. Bonds chopped around quite a bit this week at these lower levels, gaining a couple of ticks on the week. For the 30-year, not that much. The 10-year gains 2 basis points as far as the yield goes, up to 2.66, and that's still some further flattening in the yield curve. The dollar, as we said, big down week, down 1.5 points. Gold and silver, a pretty good size up week as the dollar fell. The gold market up about $18, silver market up about 34 cents. We did a very interesting video this week on Thursday. You should watch it, where we talk about the relationship between the gold-silver ratio and Bitcoin. Can you imagine that there's actually something in there? And it says something about a potential pairs trade between gold and silver. So I think it's very interesting and very worth you taking a look at that. If you're not a member, of course, you can become a member, and you can write me for a half price link. As far as oil goes, that had a big jump, up 260 on the week. It's at a big resistance level now, right around that 66.5-ish area. Report came out that there was a huge jump in the rig count, and production in the U.S. is soaring. It's going to be very hard to make a whole lot of upside ground here in the oil market, and that's probably going to give us some potential short side trades coming up. That's it for the opening segment. I'll be right back with the best and worst stocks for the week. All right, for the best stock of the week, the best stock absolutely was Netflix, a giant gainer in here of 22% on the upside as it really basks in this massive subgrowth that they have had, especially in Europe. The real market got, I think, very caught by surprise, and so did I, because Netflix is on our list of the riskiest stock for the year. So far, that's true, but only for the shorts. So Netflix has this giant upside gain. Let's take a look as we look at the next Netflix chart. And of course, what we look at is cycle analysis. So before I get to that chart, let me just remind you that there's charts here that are cycle analysis, and that cycle analysis is looking at the rhythmic motion of the market. If you would like to find out and learn more about this style of cycle analysis, we're doing a cycle workshop, and that is coming up in April when it will be available. That's our launch time. If you go to the askSlim site and you go to the bottom of the front page, you can sign up and get on that list. And coming just in probably just in the next few weeks, we're going to be offering a special pre-launch price on that. So you want to get on that list for the cycle workshop that is coming up. Okay, back to these cycle charts so you can get an idea what they look at. Don't forget, follow me on askSlim and subscribe on our YouTube channel for sure, and give me a thumbs up. So let's take a look here at this Netflix chart. Now you can see in here there are two charts actually we're showing you, and the one on the left is a weekly chart and the one on the right is a daily chart, and this is our cycle analysis. So what I'm going to do is I'm going to blow up the weekly chart, and then we'll go to the daily chart for you to see also. This, you could see, is a repeating rhythm of upward cycles. We call them bullishly configured cycles because each of these cycles that you can see right in here actually was affected by an upward momentum, and that's why they took this kind of shape that you can see as the directional component keeps pushing it up, and then this massive surge that you can see on the upside. Note this 34-week moving average, that it continued to move up, and note those intermediate support zones that keep being the exact spot that these little pullbacks come down to before the stock explodes again. Earnings in line, but that massive growth really has helped, and you can see in here that it is moving through all resistances. Generally, that 261.8 fib extension does not get approached, but you've got a massive bullish stock in here, and that would be kind of the area to look for in here as an upside stalling, at least a target of about $287. So a very strong look at cycle analysis in there, as you can see, that rhythmic motion, which is the money flow in the market. Take a look here at Netflix on the daily chart. I'll just blow this up for you. And there are small cyclical patterns in here also. This one is, you could see that big earnings gap here that occurred on Monday. And we've gotten a long way from the slim ribbon, so if you believe in any kind of mean reversion, some point here it's going to come down and touch that 13-day moving average, that middle of the slim ribbon, which is our momentum signal. There's where momentum turned up right over there at about 198, and of course it jumps to 273 in this almost straight line. And so with the positive momentum, we would generally look for a test of the slim ribbon at some point in here, and you could see that's our projection over here as we expect it to get some modest pullback. Like we said, it might get up to that 287 level before it does that. Intel is the next one we're going to be looking at, up 11% on the week. Earnings were strong in there in Intel, and the stock makes a 17-year high. Pretty amazing when we look at that. Their guidance was really strong, and the street really loved it. So Intel, INTC, we'll take a look at that chart on our weekly patterns, and we'll do our best to explain these cycle patterns to you as we go, because we want to encourage you to go sign up on that special list that we have on the site, and get in on that special offering that we'll have as a pre-launch price. So here is the cyclicality that you can see, and you can see these idealized cycles, as we call them. And here you had, a kind of a negative direction you could see as that came in, but then you had this very positive move on the upside. In other words, there was a corrective period due right in here, but it didn't correct. And what we did was we told our subscribers that this is a very bullish, what we call right-hand translation. No correction visible, and it's doubling up on the upside, and that's certainly what it did. You can see in here that what it did is correct right into this time frame that it was supposed to, and then explode to the upside. Touches that perfect 61.8% support area, and then the giant move here on these powerful earnings. Guidance strong. See right up here, that's the target zone around 51 or a little bit better in Intel. So a really strong look there. Whirlpool, WHR. This one pops on earnings, and pops also on, oh, that's not WHR, is it? There's WHR. As it also pops on the tariffs that were imposed on washing machines. So the president imposes tariffs on washing machines and on solar panels, and of course Whirlpool is known for their washing machine sales, so the stock absolutely explodes. It was a real oddball pattern right in here. In other words, this period of correction was so strong that all it could do in there is move sideways, and then it breaks out above that level and explodes. We're targeting the 78.6% there, up around, well, 194 on the upside there. And you can see these are our cycle patterns, and these are enveloped for you to get a little clearer look at how ranges look within cycles. And we do envelopes sometime, and we have a lot of other ways that we show the movement in the stock, and this makes it really clear when you look at that. The next one we're going to look at is BABA, Alibaba, as this surges up to a new high also, and you can see it gets into that level of fib extensions and very late in a pattern. Analysts positive on this one. Earnings come out on February 1st, so we're going to get those pretty quickly. The analysts like the prospects for cloud and retail, those opportunities in here. So you can see in here what this pattern looks like. It looks like it's going to have just a modest drop right in here and then another rally. Note right in here it did the same thing, a modest drop, and then took off again. Note that right over here. This is incredible patterns in here, as these powerful right-hand translations. We keep telling our subscribers about these, and sure enough, just unbelievably positive patterns in there that you can see in Alibaba. Talk about positive nonstop up here is Amazon, AMZN. As you can see that, well, analysts upgrade the price target in here. Again, we're looking at bullish cycle pattern after bullish cycle pattern. This is on my riskiest list for the year also. It's based on valuations. It's a long year, and you can see out here we believe there's a pretty big corrective process coming, and the forward PE is just absolutely out of sight on this. This is like .com era PEs, and at some point senses are gonna start thinking about this crazy valuation, and analysts will start coming to their senses, and there will be a stall. Right now you could see the 100% fib extension right over there where it's getting up to, and that's at around just over 1400, so that's where it's gotten to right now. You can see by our projections we just don't see a lot more upside in here. Of course, that hasn't been accurate to this point. General Dynamics gets a pretty good upside tick in here as earnings beat, analysts upgrade, and you can see again, this one we gave you a little closer look at some of the stuff that we show. These are positive configurations in here where you can see each of these cycles moving on the upside in an upward stair-step fashion. There was no violations in here, all of them bullish, and then it resolves itself with a big spike on the upside there. Now, when you get this kind of moves very, very late, I mean, this is 2 years worth of data that you're looking at in here, then you start to know you're getting really nutty, and you got to start to wonder whether these things will be able to hold up. But you could see in here that these upward cycles just kept going right in here. Notice how I'm tracing them out in here, and then this big upward spike right there. We're going to look for it to stall out over here, but we don't really have a good sense for the upside objective. It's pretty hard on some of these when you're making new highs. And the last one we're going to look at here is Square. Big gains on the week, and it gets up into that 78.6% area right there. This one is just another one that is crazy price. And we think that somewhere between this area 47 and the old high up here near 50 is where it's going to roll over and then move to the downside again. So this one they just are loving again for the moment. But when you look at a company like Square, and they have decided that they were going to make an acquisition of a company that does restaurant delivery, and then the stock spikes up big based on that kind of news, well, restaurant delivery, that's a new idea, right? Well, I don't think so, and Square is not one we like, and we think that the valuations are just really, really tough, and we think that one is going to stall out pretty soon also. Of course, as long as you've got big money flows in the market, these stocks are going to hold up, but we think, again, the risk of that is just too high when these valuations get to these levels. Next thing we're going to look at is the worst stocks for the week. All right, for the worst stocks for the week, one of the stocks that we have loved to hate is Sears, SHLD, Sears Kmart. We have believed that this stock was in big trouble and right now headed to oblivion as they lose 30% on the week. Just a massive downside move. The news that came out this week is they were making a private deal to get rid of some distressed debt. I mean, this is just a huge scramble that's going on for survival in there. And here is that Sears pattern. You could see these downward cyclical patterns that have continued. We think the stock will be sub 2, maybe closer to $1 before you know it. So this is a look at a really bad looking pattern in here, and it's been, following these negative patterns all the way down. You could see that big negative cycle. Here's the point where it was supposed to rally into the resistance. It got a week and a half rally in there and then came and broke down that level. This points down to March, but when you get to a $2 stock, I mean, we're just going to have to take this off our lists because it's not worth even looking at. But at the same time, I just wanted to show you the disaster that you see in here when you look at Sears. We've felt that way about JCPenney also. JCPenney might have a little bit more life to it, but not much, as these old big box retail companies are just not in great shape. Take a look here as we look at the airlines. The airlines, as we said earlier in the show, took a pretty big hit this week. Fear is capacity is growing, and that there will be a price war coming up. And price wars are really bad for the airlines. We've seen them take some major hits in the past on that kind of news. Take a look. We're going to look at United first. United got out of step with the rest of the group as it falls pretty significantly, 14% this week. You'll note on the bottom, whoops, what happened there? Let me go back and bring you back United in a second. Okay, so right here you can see that it's gotten out of step with the rest of the patterns in here, where a lot of them are due to make lows somewhere out over here. This one actually is not due to make a low out till March. So I'm going to show you some other stocks in this group that look like they have only a couple of weeks left on the downside. This one looks like it's worse. Look at this massive downside move in there that you can see in United Airlines. And we'll take a look at the daily chart right in here, and you can see this big downside gap that occurred. And note that cycle low support right there that it broke. That is really bad news, and that's why you can see on this daily chart that what we expect is that, well, maybe it gets support right over here at this major 61.8, but then you get a bounce and then moves down again. And that's that move out into March that we talked about that we think is bad. So United Airlines looking bad. Note that United Airlines was positive momentum right in here. So it gave you that sense from $64 all the way up to $79 that it was positive. Then that news comes out right over here about their capacity, the big breakdown, and see this little blue arrow right there? That's the slim ribbon telling you that the upside momentum is gone. And well, it's no secret when you look at the big gap, but you know, you had all these little drops that did nothing, kept your positive momentum, kept it bullish. But now what that's saying is that you can expect negative momentum in here, and that rallies will fail, and that the stock still has lower prices in there. So United Airlines to us is looking pretty bad. Let's switch over and look at these other airlines quickly. SAVE, this one is at a point where we think that it's close. You see this pattern over here, so it's a little different than United Airlines. And that to us looks like it's going to get into this support zone and is due to bottom in a couple of weeks. So in the next couple of weeks, SAVE is likely to be a buy. We don't think it's anywhere near as bad as United is. JetBlue also down 9%, and a very similar pattern in here. And you can see in here that we have this listed as an intermediate buy zone. If you're wondering what all of that analysis is in there, what we're showing you is these big cycles right in here. That's these right in here, and the smaller patterns right in here, and that's the dotted line right in here. So both of them, when they both come down together, that makes the low periods right in there, and then when they both go up together, you get rallies. You see this one right in here, the same thing, right? See this one right in here, the same thing, where they both went down together and then they both go up together. So that period of rising, two cycles pushing up, comes in about a couple of weeks in JetBlue, similar to what we saw in the SAVE Spirit Air pattern. American Airlines, take a look at this, and you can see almost identical, right? Getting into that intermediate support zone, two cycles going to bottom in the next 2-3 weeks and then turning up. So American Airlines still in a risky period, right? Because it's got a couple of more weeks, but then it should be better after that. Delta, pretty similar, also down about 7% on the week, and we think that Delta also has got a couple more weeks. So most of these stocks in the airlines got hit really big on these fears. They're getting into a period in a couple of weeks for a bounce, and that bounce should last several weeks. Overall, the picture may not be great for the airlines looking forward because of capacity, and like I said earlier, that could negatively affect Boeing. Watch the action in Boeing and see if that stock starts to stall out after all of this time. I think that's pretty significant when you look at that. Take a look as we move back into the retail category. We're going to look at Bed Bath Beyond and GameStop, as these stocks are also having a rough time of it. You know, again, big box, not competing with online sales. Look at this. Now, this is the opposite of some bullish patterns that we showed you. When you see red starting to show up like here and here and here, then you know that there's a lot of trouble. These are negatively configured cycles. What does that mean? Well, it means that you're in a downtrend, right? And what happens is that rallies come, but they fail quickly and they don't last for very long. Those are those little green zones, and then they turn down again pretty significantly. And you can see that that is a time period here into March that it looks like Bed Bath & Beyond is likely to continue on the downside. And for it to get bullish and to make a base, it would have to get stop a decline in here above 19 over this next 4 or 5 weeks. We kind of think that's going to happen, but this period over here still has a lot of risk in that yellow zone. And you can see that there are periods where it gets into yellow zones, where it breaks down below important lows and gets into these red zones, and then accelerates big on the downside. So that's always a fear that this is going to accelerate down. We don't know if that base is going to get built or it's just really in some problem. 8% down on the week. Morgan Stanley downgrades the stock as it looks pretty sick. GameStop, talk about looking sick. Take a look at this one. Again, very clear long-term negative patterns that keep showing up. Lower low, lower low, lower low, lower low. And is this one headed to a lower low? It sure looks this way. Bottom due out over here in late March or April, and this declining trend is still there, failing at that 34-week moving average, so pretty good. This is a value trap. What's a value trap? It's a stock that's with growth decelerating, big problems in there. They have this big impairment charge that they had to take, and the market's been collapsing ever since because they say they've blown the mobile cycle. So if that's the case, the stock's in trouble. PE of 6, yet the stock keeps going down. Well, that's because at some point the earnings are going to take a big hit, and the markets know it, and that's why you're seeing something like that happen. Also in the, well, kind of retail category, retail food service, is Starbucks. SBUX. This stock, one that we look at all the time because it's in our list of the 80 favorite symbols, our focus list that we look at. And this stock has broken down. It has made a top that we believe is saying it's going to move down for a long period of time. So here's, first of all, we had the top that we had pointed out where you see that big engulfing pattern that was way back in last May. That said, you know, a top in place, you could see that, and it was a total collapse. The stock moves down from 65 to 52 bucks, big drop in there. And then it solidifies, right? So you have this big positive cycle right over here, and then move to a higher high. Fails right in that resistance zone right there, and then moves down. What's hurting Starbucks this week? Well, down 5% in the week. Their sales missed, and if you can't get sales growth in this kind of a stock, you've got problems. Analysts downgrading the stock. Now, note this intermediate term cycle violation. What that means is that you had the rally right over here. Again, you note 2 cycles giving you upward momentum, pushing up right there. But then it came down and broke that level. And when it breaks the level, it falls all the way to the next point where it's due to make a bottom way out here in May. So the way this looks, it declines over here until March, gets a rally, and then moves down again in May. That is really an ugly, ugly looking pattern when you see that. A breakdown, and we believe that Starbucks does have huge problems in here, and we would sell any uptick in here. This is a really bad pattern. Let's take a look at the daily chart in Starbucks so you can get a picture of what's going on in here and, you know, what our subscribers get. So here you could see the cyclical patterns, and you could see this gorgeous upward move, right? Each of these cycles in this stair-step upward patterns in here, bullish, all of them coming down, hitting minor support, moving up, and bullish. Upward momentum forms right over here, and now you have the breakdown. The momentum is now gone, of course, but there's a low due right over here and then a rally. So note that this is the upward area that we expected to bounce to. That's our minor resistance and sell zone. In other words, the probabilities are high that if it gets there, it's going to stop and it's going to get another move to the downside over here. We're looking for this area 59, 59 3/4 as our short side entry zone right there. That's what we look at, these cyclical rhythms, because we want to raise the probabilities because we look for important high quality entries. Here's that negative look at that big weekly pattern. Here's the look at both of them moving up together and then breaking. So I'm just going to show you this upward trend and then breaking. On the left side, the weekly, on the right side, the daily, and this looks like a lot of trouble. Follow this pattern right in here, the rally and the sell-off. That would come right in here, the rally and the sell-off right over here. So that's the way they look on a side-by-side basis, and that is an ugly, ugly pattern. One more stock to talk about that is a stock that we have loved. It has been just soaring. The news has been great. Everything about this stock has been great until this afternoon. And there's some bad news that came out. And Wynn Resorts, WYNN, turned south in a very, very big way. First of all, let's just take a peek at this pattern in here on the weekly chart. You can see that big shooting star there. What could have caused that? A big move. It hits the 100% extension number right there and then collapses. It was up like 14% in the week and now has given almost all of that up. Look at this daily chart right over here. It comes up and hits close to that 261.8% extension and gets extreme overbought based on our option bias indicator, and then comes down. There are allegations that against Steve Wynn for sexual misconduct. And we know that the way the news goes these days, that is some bad news. And if we get patrons not wanting to go into Steve Wynn's casinos based on this, well, it is going to be an ugly situation, and that can really affect earnings on this stock. And that is certainly a reason for concern. Stock takes a big hit on these allegations, and it's a real sign of trouble. That's it for one of the great stocks that we've had on the upside in here, and we wouldn't be surprised to see a lot of choppy action and a lot of downward action in Wynn. We would call a top based on what we're seeing there. That's it for the worst stocks of the week, and now we're going to come right back with our short-term view for the coming week. All right, short-term view for the coming week. Do this every week. We look at short-term charts. We look at the daily chart specifically and try to get a sense for what we believe the direction, the momentum is, because momentum is always so key to what we're doing, and also the cyclical patterns. We're at a period right here. Wow, a lot of sirens around here today. We're at a period right now which is extraordinarily rare. And that is with massive money flows coming into the markets, that the cyclicality is in many cases been basically erased as tons of money comes in. Cycles are measured from low to low. In other words, you look for rallies and sell-offs and rallies and sell-offs, and that's what makes the cycle rhythms, which are often very readable. But when there's so much resistance to any decline, you don't get bottoms, and it's very hard to get these reads. And that's really what we've been struggling with in here in these markets. So we're going to look at light crude, the dollar, the gold market, bond market, and the stock market here on the short-term view. As far as the actions related to momentum, they were 100% again. Every single upside momentum moved up. Every single negative momentum moved down. And that is a important aspect as we do this. As far as cyclicality goes, we were only 20% accurate on that because the dips will not come in these markets. So we expected them to come in the light crude market, we expected them to come in the stock market, and of course no dips came in those markets really at all. So that's really what we, as an analyst, that's really the issue that is a struggle right now, and this is an anomalous time. This is, 43 years I've been at this, and it's rare to get to a time like this. Late 1987 was like this, 1995 was like this, and believe it or not, I remember a time in 1976 that was similar to this, where there was a massive inflow of money early in the year in 76. I did really poorly at that time, though I had a good year that year. So let's take a look here as we look at our short-term view for the coming week. We're going to put up the daily chart in light crude. And again, we're going to be focusing on momentum and cyclicality, support and resistance levels. That's what our main focus is. So this is the daily chart in the light crude market. We'll take a look and move in here. As you can see, what we're looking for and what we were looking for in the last week was for it to, we saw this rolling over right in here, and we thought that it would come down into this period and then turn up. Well, the momentum kept it moving up. You can see the slim ribbon positive momentum has been going on for just months, and that has not been able to resist it. Now, with rig counts exploding and production exploding to records, this is likely to start to struggle, and we think there's a big resistance up near this area, so we're looking for this week for it to have a dip to the downside. The upward the downside support is probably in the slim ribbon now, or near that 23%, maybe getting down just close to 64 and then bouncing up again. We see that as we look at these shorter term patterns in here, turning down and then back up. So that's all we're looking for in here, and we're just going to call it a week that maybe doesn't have a big change, a little bit of a pullback, a little bit of a rally, but maybe not a big change in there in the light crude market. It's getting up near that important resistance area, so we think upside progress is going to be done for. Next thing we're going to look at in here is the dollar. The dollar sign DXY is the dollar index that we're looking at. And you can see in here that the dollar has been getting slammed. You could see that as this moved down pretty significantly here for the week. We thought that the dollar would move down and then bounce. So it moved down, certainly, and then this bounce doesn't really count for much, right? Because we didn't really get the cyclical upturn we were looking for on that minor cycle. Though, see the hammer bottom? That says we're probably have a bottom in here, so it's pretty significant there. We're expecting this bounce to be a minor bounce in here and then turn down again and break below that 88.50 number again. So this bounce is pretty significant for what we believe is going to happen in some of the other futures in the next week. We think that it will get up into this slim ribbon area up here, maybe get up to 90, which is only about a point on the upside, before it then rolls over again. We're going to call it for an up week, though, in the dollar. And we're going to look here at a chart that we haven't looked at in a while, and that is momentum on this chart. This is a pretty unusual chart that you can see, as momentum on this has been red, and you can see moving down. Anytime you get this slim ribbon failures and get overbought on the projection oscillator, it's very likely you're going to get another move to the downside. You could see that happened here, and you could see that happened over here. So the most significant thing that we're looking at in here, and that is the market forecast indicator. That is giving us a buy signal right over here. So we're looking for a minor bounce and then a pullback, and that market forecast indicator right there, which gives us 3 time frames, all super oversold, says that there's a bounce coming. So I wanted to show you that because I thought it was pretty significant here for the dollar. And that also means likely that the pullback that we're seeing happening in the gold market is likely to still happen. So here's that dollar index right over there. When you look at the euro currency, and our members know that we put out a trade setup in the euro currency, it's at a point where we believe it's going to roll over. Now you can see that big shooting star right over there. That is a very toppy pattern in those fib extension areas. It's pretty overbought, and we're looking for a pullback in here in the euro currency. 123.50 or lower would be our downside target in here over the next week. So we think the euro will pull back, and of course it's inversely correlated to the dollar, which is likely to, as we said, get a bit of a bounce in this oversold condition. So that is pretty important resistance area that we're looking at right there in the euro currency. Let's take a look at the gold market, /GC. And this, I'm going to make sure we have the proper alignments right in here. There we go. So what we looked at in here was that we thought that there was a topping pattern in here coming into the gold market, and you could see that right in here. So we thought that this was beginning to roll over here, these cycles. Again, slim ribbon, momentum strong, just as you see right there, and that remains. Again, this upward slim ribbon 13-day moving average, or the 21, remains support. we kind of see it rolling over here. You could see that rejection right over there, up at that old high. That's that green coming across right there. We think it's going to start to top out in here a little bit, get a pullback over this next week as the dollar then gets this little bounce. So we're looking for minor pullbacks in here only. We're going to call it a very small down week in the gold market, and we're really bullish in gold on the intermediate and longer term. So we think that any pullback in here is going to be temporary. Momentum just super strong as you look at that. The same thing in silver that you can see right in here. And that, again, you can see the smaller patterns in there worked pretty good as you got this pullback right in here and then got the pop up that you can see going right in here. So this is a pretty good rejection. Again, we think it's going to be rolling over in here. We're going to call for just a small down week. Though, if you watch the video we did on silver and gold, we have reason to believe that the silver market could begin to outperform pretty soon. You don't want to miss that video. I think it really explains it well. And so this is a look at silver. We're just going to look for minor pullbacks on this very strong momentum and not being able to get down very far. Now the bond market, negative momentum, we believed that it was going to continue to be a problem. It got just some minor bounces and a lot of zigzag that you can see in here as it finishes, small down for the week. We talked 2 weeks ago about it being a sale at this minor resistance. We talked last week about the same thing. It's a sale at those resistances, and it keeps tracking this downward pattern that you can see right in here and right in here. This is the point over here where we think that there's a significant bottom going to be made. Maybe that lines up with the time that we think the significant top is going to be made. That's mid-February when you look at that. So we think it's going to keep chopping its way down. Though this week, you can see based on our projection in here, we think it's going to bottom. We're going to call it coming down into this kind of midweek period, Tuesday, Wednesday, right in there, and by Wednesday, Thursday, turning up right there for a modest bounce, and then before it rolls down again. So just looking for this modest bouncing period coming up in here in the ZNs, the same thing in the ZBs, as the ZBs are much better traders, of course, because there's bigger moves, and you can see that same thing, this kind of rectangular consolidation pattern. We're looking for a couple, 3 days on the downside and then bouncing up. Again, here's your minor resistance. You could see all of these as we've been putting in here. Short-term resistance zone here. This one we had listed as a sell zone. Gets right in there and collapses. This is your minor resistance, tickles it, and then comes down again. So down up into whatever the new minor resistance is, down one more time, and then maybe a better time of it over there. Again, into February. That's what we're looking at. So that's a look at the ZBs. We're just going to call it a week where they have more of this downward chop and then reverse and then get some upside. And we will call it a minor upside week in there as we expect it to get into that minor resistance on the upside later in the week. That is a look at the ZBs, ZNs, and the Treasury market. So the last thing we're going to look at is the stock market in here. As we said, there is no cyclicality whatsoever, money pouring into the stock market and equity markets around the world, and that has prevented any of the what we call normal cycle corrections to come. They have been extremely modest, and the rallies extremely long based on what would be normal. Right now, well, that's 14 right there, so we're 16 days into this advance. That is off of this cyclical low right over here. That's longer than this one, or this one, or this one, or this one. Well, this one actually was a little bit more. So this is an extraordinary situation. Again, what we're looking for is a minor decline right in here. Maybe test this area of about 2820-ish. In the top of the slim ribbon, or the 13-day moving average coming to that minor support, which is around 2814 now. and then moving to the upside again. So we're going to call just minor pullbacks in here, and that's the highest odds is what we're looking at. That and if you look at these patterns in here, they have just continued to be these modest little pullbacks, and that's where we are right now, expecting that modest pullback and then that upward move. Just crazy as we look at this, and it's for somebody like me who believes in market rhythms, this is just as difficult as it ever gets, that is just a super strong minor pullback is what we're looking for. Take a look here at the NASDAQ, and you can see that, well, it's the same story, right? Minor pullback in here, likely to get down to, well, we'll call it maybe about 68, 70-ish or so, and that would be the kind of the worst scenario that we could see based on this minor pullback that's expected in here, and then another rally. But then we believe that after that next rally, it's going to start to suffer. So we have some more pessimistic looking forecasts in there moving forward, and this might be just too pessimistic, but we're following that green pattern, that dashed pattern there on the bottom, and at this point there's no reason for us not to believe that it resolves itself more like this right over there. So this is the pessimistic outlook. This is the outlook based on what the markets have been doing so far, and we'll see which one of those come true. Kind of wanted to show you both of them, the pessimistic and the one that follows the patterns that have been going on right now. One more thing I want to show you, our market condition indicator, which I haven't put up here in a long time, which it's built on multiple time frames. It's an amazing indicator, and usually when there's some market fluctuations, you'll see something in here that is really valuable, but in this case, this just tells a story. Here are all 4 of the major stock market indexes. And what happens normally is there's fluctuations. A bullish situation would get it moving down towards the 0 line. This is called the swing zone between 25 and minus 25, and then move up again, and then move down, and then move up again. This has been pinned up here at nearly 100%. You can see the Russell doing the same thing, the NASDAQ doing the same thing, the Dow doing the same thing. This shows internals on a multiple time frame basis that are as strong as I have ever seen them, and continuously it hasn't been changing whatsoever. So just an amazing thing that we see there in these strong markets that are just bulls loving it, momentum traders loving it, and the short side traders, option traders that believe in selling premium, and those that believe in mean reversion, well, every one of those struggling as much as they ever have. I've seen markets like this before, I tell you, and they don't end pretty, but if you get in the way of them, well, your account doesn't look pretty either. That's it for Market Week for today. I hope you found some information that was valuable to you. Don't forget, if you're interested in getting any of our content, you can try it for a month for half price, level 2, 3, or 4. Just send me an email, ask me for that link. Go to our main page and to the bottom, and you'll see Cycle Analysis Workshop. Like I said, that's going to be launched sometime in April, and if you get on that list, you can get in on a special pricing that we'll be doing as a pre-launch, and also follow me on Twitter, askSlim, and become a subscriber on our YouTube channel. Give me a thumbs up, and that always helps us. And I'll see you next week. I want you to be really careful out there because it is so crazy, and we're always wishing you great trading.
Well, I'm going to sit